What's going on, guys? It's Investing Hustler here, and today I'm going to talk about everyone's favorite company, Aurora Cannabis. And I'm just going to warn you guys in advance because a lot of people seem to hate the Motley Fool. So I'm just going to let you guys know that I will be reading a Motley Fool article. So if you guys hate the Motley Fool, I'm just saving you your time right now. You guys don't have to watch this video. But for those of you who do like when I read these articles and talk about Aurora Cannabis, the article is called "Should You Buy Aurora Cannabis in 2019?" Well, before we get started, I want to wish you guys a Merry Christmas, Happy Holidays, and a Happy New Year's. And all I want for Christmas is a thumbs up, so don't forget to give me a like. So before we start the article, I'm just going to review Aurora Cannabis real quick. So right now, Aurora Cannabis is sitting at $7.12. They did have they did have a nice push forward on Friday of 4.71%. I did make a video on Thursday night saying that the cannabis sector would be on fire the next day, and they were somewhat on fire. Aurora was up 4.7%, Canopy 2%, and Apria, of course, was up 12.5% because of the deal with Green Growth, or that whole buyout thing, the hostile buyout. I made a couple videos on them, so you guys could check it out right here on the top corner. And my prediction was right that the cannabis sector would be on fire the next day, because as you can see right now, all these weed companies are green. Canopy green, Cron green, Tilray green, Afria green, Hemp was green, T-God was up 15%, Hexo was up 13%. As you can see, my prediction was right. The marijuana sector was on fire on Friday. Whether that will continue on Monday is questionable, but this article is, should you buy Aurora Cannabis in 2019? So we're going to see if Aurora Cannabis will continue to push forward in 2019. As you can see right here, Aurora Cannabis had an all-time high of 1625. And that was pre-legalization, and pretty much ever since legalization day, Aurora Cannabis has been on a major downfall. We've seen lows of $6.26, and most recently, I think we hit that $6.23. So those that seems to be a small little support line. It just wants to barely reach $6.20, and then it bounces back up. So I do plan on buying more Aurora shares. I actually sold all my Aurora shares, and then I've slowly been buying back because I knew I could get them back at cheaper prices. I'm honestly waiting for it to go under $6 to buy, but who knows? Maybe I'll never get that opportunity. But I do plan on getting more Aurora shares if it hits around 650 again, because that seems to be a very good price to buy it at. So let's take a look at Aurora right now. We're very close to our 52-week low of $5.10. And right now, if you look at the technical analysis, it's neutral. In the summary, it's a sell. Moving averages, it's a sell. Let's look at the 1 minute. It's neutral buy and a strong buy. And I think the best one is the 15 minutes. It's a buy, a strong buy, and a strong buy. So Aurora currently has a market cap of 7.1 billion with a PE ratio of 30. And if we look at their price to earnings ratio, that's 30, price to revenue ratio 92, price to book ratio 2.5, price to sales 128. So this would definitely be considered a growth stock. They currently have 961 million shares outstanding. Some people might get turned off by that. I'm going to start this article, and it is by Motley Fool. So should you buy Aurora Cannabis in 2019? So the marijuana industry had an unforgettable 2018, with the cannabis movement arguably advancing more than in any previous year. As we ready to open the curtain in 2019, Canada has legalized recreational marijuana. 32 U.S. states have given the green light to medical cannabis, 10 of which also allow adult use pot. The highly restrictive nation of Thailand recently okayed medical weed, and the billions of dollars appear primed to flow into the legal cannabis industry. Not to mention that the percentage of Americans who want to see marijuana legalized nationally hit an all-time high in 2018. And yet the marijuana stocks went up in the smoke this year, with many losing 30% or more of their value. So Aurora Cannabis, is it a buy or buy in 2019? Possibly the most polarizing and widely followed pot stock of them all, Aurora Cannabis shed more than a third of its value in 2018. The big question is, does Aurora Cannabis deserve to be in your portfolio in 2019? Let's take a closer look at both sides of the argument. So why Aurora Cannabis is worth a look. So to begin with, it's virtually impossible to find a Canadian pot grower that offers more annual production at peak capacity than Aurora Cannabis. Prior prior to completing its ICC Labs acquisition, Aurora management has been calling to roughly 570,000 kilograms to peak annual production. The addition of ICC tacked on 92,000 square feet of the Operation Grow Farms, as well as more than 1.1 million square feet of developing greenhouses. Between organic partnered and acquired capacity expansion, Aurora has a path to easily hit around 700,000 kilograms in peak annual yield within the next 2 to 3 years. And I also made a video titled "Can Aurora Hit a Million Kilograms per Year?" I'll leave the link right here on the top corner. It talks about how Aurora can one day have the potential to reach 1 million kilograms per year. So being the top dog in terms of production is so important because it makes Aurora a logical source for Canadian provinces and foreign markets that are seeking a long-term supply deal. It could potentially also be dangling a carrot for a brand name beverage, tobacco, or pharmaceutical company angling for a cannabis partner. And as the icing on the cake, Aurora's massive scale should allow its per gram growing cost to drop considerably in the quarters that lie ahead. So this is what everyone's actually waiting for that brand name beverage, tobacco, or pharmaceutical company to make a deal or partner up with Aurora. And I believe that once or if that ever happens, Aurora share prices will blow up. I wouldn't be surprised to see it go to 15 or reach new all-time highs again, because we've seen what deals do to these marijuana companies. When Canopy had that deal, they went up 30-40%. Even when Kronos had that deal, their share prices, even when Kronos had that deal, their share prices blew up. And even Afria just had a rumor about a deal being made, and their share prices went up, even though it didn't seem to be a legit deal. So let's move on to the article. Second, don't forget that Aurora Cannabis is more than just a dried cannabis flower producer. Aurora has a number of alternative cannabis products on the docket, including the recent launch of a line of soft gel cannabis oil capsules. Although most alternative products such as vapes, edibles, concentrates, and cannabis-infused beverages aren't yet legal in Canada, this could change as soon as this coming summer. Aurora has previously expressed interest in developing cannabis-infused beverages and held tasks with Coca-Cola in September about a possible partnership or equity investment, which didn't go anywhere. So to build on this point, Aurora Cannabis also generates revenue from its ownership of Larson, which acquired in November 2017. Larson designs and constructs greenhouses around the world, meaning Aurora can internalize some of its costs when building organically, as well as benefit from helping other growers construct greenhouses. And third, Aurora Cannabis has been tremendously successful with its equity investments in a handful of other marijuana stocks. Aurora can choose to hang on to these investments and benefit if the pod stocks recover in 2019, or it could always liquidate them and generate ample cash for its expansion efforts. As a reminder, Aurora has a presence in nearly 24 countries, and this could grow further in 2019. That was the positive. That was the good. I'm pretty sure now they're going to talk about the bad. So why Aurora Cannabis should be avoided. But there are two sides to this coin. One of the bigger reasons you might want to consider leaving Aurora Cannabis on the sideline has been the company's inability to generate recurring operating profit. Sure, it made a 105 million Canadian dollar profit in its most recent quarter, but strip out a number of one-time benefits tied to derivatives and revaluating of an influential investment in the Green Organic Dutchman, and you're left with a mammoth of 111.9 million operating loss in the first quarter of 2019. Aurora Cannabis is a long ways away from being near the end of its expansion phase. It announced a massive 1.2 million square foot construction in Medicine Hat, Alberta at the end of April, known as Aurora Sun, and has to worry about completing expansion projects at ICC Labs and MedRelief. In addition, it has to market its brand and expand internationally. These expenses are going to almost ensure that Aurora Cannabis continues to lose money without the assistance of one-time benefits. So Aurora Cannabis has also shown little regard for its shareholders, with its propensity to balloon the company's outstanding shares count, admittedly with non-diluting forms of financing still few and far between. Bought deals offering have been about the only readily available means to raise capital. Nevertheless, Aurora's growth at any cost strategy has seen the company use its stocks to acquire entire businesses or issue shares
or convertible notes in order to fund organic projects. And that's exactly why we see that 961 million shares outstanding, almost at a billion. So at the end of 2014, long before the cannabis craze really began, Aurora Cannabis had just over 60 million shares of stock outstanding. Following its ICC lab purchase, it may very well surpass 1 billion shares outstanding. In 2018, shareholders have witnessed the company's market cap rise 56%, yet seen its share price fall 35%. That 91 percentage point difference is the result of share-based dilution. Aurora has given no indication that it'll stop diluting investors anytime soon. Lastly, Aurora has yet to land a partner, which is a bit odd. While a brand name partner could easily be a catalyst for Aurora, its inability to find one thus far suggests that maybe Aurora's asking price is too much, or that it's not as much of an industry leader as it's being made out to be. So what is the verdict? So as recently as mid-October, Aurora Cannabis stood side by side with Tilray as my top marijuana stocks to avoid. Then Aurora proceeded to lose more than half of its value in 10 weeks. Now I see it just as a modesty to slightly pricey. While not oblivious to the competitive advantages of being the world's largest publicly traded cannabis producer, Aurora's lack of caring for its shareholders sticks out like a sore thumb. I worry about Aurora's inability to integrate all of its acquisitions efficiently and wonder whether by the time it's finished diluting investors into smithereens, it'll be able to produce a meaningful per profit share. Personally, I don't see the need to jump into Aurora Cannabis here and would suggest patiently waiting for the company's buy everything ethos to slow or end completely before considering it for its investment. So this is a very two-sided story, and I don't know why people dislike the Motley Fool. They literally just put it all on black and white. They talked about the good, they talked about the bad, and I pretty much can agree with everything. Yes, they are over diluting their shares, which is why we have 961 million shares outstanding, and they are 100% right. Their market cap went up by, let's see those numbers again. Their market cap went up by 56%, yet their share prices have fallen by 35%. I personally still love Aurora. I will still continue to buy the dip, and if I see if I see any spikes, I will sell them with the intentions to buy back again, because as you can see, this company has been very volatile. You could literally be buying here, selling here, and then buying back again here. So there's just many opportunities where you can constantly buy and sell, buy and sell, and buy and sell. Obviously, it's impossible to time the market. Sometimes you could be caught selling here, and then next thing you know, Aurora pushes forward to 11, and you don't get that opportunity to buy back again. That is the risk of being a day trader slash swing trader. My conclusion is that I still love Aurora. I'm still going to be long-term investor with them, and I still will continue to swing trade them until there's more stability in the marijuana industry. So for now, if you guys decide to invest in Aurora, make sure you do it at your own risk, and this is strictly for educational and entertainment purposes. And if you enjoyed this video, don't forget to leave me a like, and if you're not subscribed yet, don't forget to hit that notification bell and smash that subscribe button. I'll see you guys in my next video. Bye bye.